I'm Chris DeRose, and I'm an organizer for the South Florida Bitcoin Meetup Group. And I'm giving you like a 101 talk with a little bit of an introduction to the 2.0 space, which for some of you, you're probably still grappling with what Bitcoin is. And us in the Bitcoin community are working on perhaps the next thing of Bitcoin, which we affectionately call the 2.0 movement. So I'll try not to do too much information on the 2.0 stuff, but it's important that you understand that there is a lot more going on behind the scenes at Bitcoin than probably what you've heard. At our meetings and my personal philosophy is that Bitcoin is a very useful tool, and that in many ways it's a commodity, and it's a programming platform. Now that's probably inconsistent with what you guys have seen on the news, which is that it's an anarchist tool for buying drugs. And we try to combat that notion. And you know, that sort of part of the movement is definitely here. I'm not going to present otherwise, but that's not what we're about, and I don't think that's what the majority of the community is about either. You might remember that the internet itself was a very niche sort of community in the early 90s, where people talked about things like Pokemon and perhaps weird science fiction obsessions and sex. So the internet itself got started from a sort of fringe element and moved towards a more center solution, and we see that happening in the Bitcoin space. So hopefully your takeaway is that that is where we're going, and that there's a lot of productive economic function there. So let's start off with a lot of the early definitions of Bitcoin and what Bitcoin is currently, and probably what Bitcoin will remain in the future as well. And I like this analogy that what email was to letters, Bitcoin is to cash money. Because that's true in a lot of ways. Bitcoin performs a lot of the functions of money. I don't actually like to characterize it as money per se. I think that money is a very specific thing to most people, and I almost like to say it's better than money in the same way that email is better than letters. But certainly it's different than money, and I'll let you guys make up your own opinion about the distinction. But in the 1.0 space, what you saw was Bitcoin being perceived as a very cash money type solution. And certainly it was functioning in that way, and it is still functioning in that way, and it will continue to function in that way. But unlike cash money, Bitcoin, I particularly believe, is amazing. It's amazing for the primary reason that it is decentralized. There is no central company. There isn't a Bitcoin Inc. It is a protocol. It is a protocol in a very similar sense to the way that HTTP is a protocol. There's no center. There is a peer-reviewed base of code that is a reference implementation, the Bitcoin D code, and it is peer-reviewed open source software. So for those who don't know, open source is things like Apache or Linux or these types of things. There are people that work on it. There is a hub, there's a community, but there's no center, there's no corporation, there's nobody with an absolute say over the matter. And that's certainly true of Bitcoin. Bitcoin is amazing, particularly for security. And while certainly there have been a lot of gaffes and mismanagements in the Bitcoin space by people holding Bitcoin, Bitcoin itself has been resilient to a very significant degree to attacks. And we know that it's secure primarily for the reason that there's a bounty for attacking the Bitcoin protocol. That bounty is in the form of receiving stolen Bitcoin. So while you definitely see things in the news that suggest that perhaps Bitcoin is a flaky commodity that was stolen from the banks, there's some truth to it, but it's only because the banks themselves are mismanaging it. And these are early days for Bitcoin, so there's not a lot of protocols, there's not a lot of comprehension about what it is just yet. So I would tell you to sort of reserve some of your apprehensions about the security to the holders of Bitcoin and not the protocol. And yes, more work can be done here, and more work is being done all the time. Coinbase is really doing a lot in this space. So for people who are thinking about looking at Bitcoin in various capacities, for any kind of security reference, I think Coinbase has been exemplary thus far. An important distinction with Bitcoin is that it is push-based and not pull-based. So for anybody who's looking at the more traditional forms of electronic commerce right now, they're used to credit cards, and they're used to handing over their number and handing over basically their private information for the purpose of an entity to pull out of their account. And so that's caused a lot of security mechanisms to break within that competing protocol, within the credit card protocol. So when you see things like the Target breach, and the Home Depot breach, and now I think the Sony breach, you're going to see that continue because it's a pull-based mechanism. The alternative being proposed in Bitcoin is push-based, and certainly we believe that to be significantly more secure. Some basics on Bitcoin, certainly in this 1.0 and in this currency sense, but true universally, is that there will only ever be 21 million Bitcoins, which for anybody who does the math can realize real quick, well, that's not a whole hell of a lot. There's, what, 4 trillion people on Earth or something like that. I don't know. 4 billion people. How many people are on Earth these days? I don't even know by order of magnitude. How much?
6 billion.
6 billion. Okay, there we go.
Yeah, 5 or 6 billion.
Right, so but the nice thing about Bitcoin that is unique to Bitcoin is that it is very divisible. Within the Bitcoin itself is 100 million Satoshis. So similar to how a dollar has 100 pennies, a Bitcoin has 100 million Satoshis. And so while 21 million Bitcoins is certainly not a lot, we don't envision running out of the ability to spend them anytime soon due to the divisibility. And two, there's a lot of talk that that number could be increased. It very well might be that we divide it to a more significant degree at some point in the future.
So where did that number come from?
The 101 million?
Where
did the 21 million?
Yeah.
It's actually like 20,999,000, something crazy. I don't actually know. Do you know the reason for it? It's probably like a base 2 kind of thing, if I had to guess.
Yeah, someone told me that they thought that he was like a gambler or something. I don't know.
Yeah.
The numbers.
Yeah.
I don't really know.
There's a story.
To some degree, it is. Yeah. Yeah. Who knows? I mean, there's so much mystery with the Satoshi figure that we really never know with some of these things. And obviously, it doesn't matter what the number is. If it's infinitely divisible, it could be one. So it could be one Bitcoin. More so than we care about the number of units per se, we care about the degree of divisibility, which certainly is significant here. But the point is that hard-coded as well, there is a fixed supply of Bitcoin, and it will not grow past that amount. Network maintenance is performed by miners, who you've all probably heard about and been very confused by. Miners are people who maintain the network, quite simply. In the same way that we need the Federal Reserve in some capacity, or banks in some capacity to manage our money supply, well, so too do we need people to manage Bitcoin's technical underpinnings. And these people are miners, and for the work that they do, they themselves are compensated. They are compensated in Bitcoin. Newly awarded Bitcoin is given to the people who essentially do the most work in mining the network. So there's a lot of different models for which you can envision what miners do, but that's the simplest, and it's true. Anyone can be a miner. It was certainly very common for a lot of people that were amateurs who had a nice video gaming rig to do this themselves for a while. Now the operations have moved into slightly more professional settings where you have a room this size or bigger filled with specialized machinery that burns electricity to a significant degree and performs the network maintenance that is needed of Bitcoin. And it's a very well-tuned mechanism, and really it's one of the more fascinating components to the whole process, I think. And I have a slide about that coming in a second. So everybody hears about Bitcoin as like this alternative currency, and of course the question is, well, what's wrong with the existing currency? And for most of us, there's nothing wrong with the existing currency. But I think that we take a couple things for granted that are encumbrances in our daily life. Certainly the easiest, cash doesn't work online. There's all the advantages that you currently associate with cash, just without even naming them, that cannot adopt the online space. You can't put bills into your keyboard and send it through a tube. So Bitcoin is very cash-like. It is very tangible. You hold it as a possession, and in that way you can use it online. So that's one nice thing about Bitcoin off the bat. Another thing, credit cards are really inconvenient. And you don't realize how inconvenient it is because you use them all the time and you're used to it. But credit cards require some 14 pieces of information from you, often your home address, just to buy something online. And there's a minimum purchase amount, and there's trust required, and all of these things with credit cards. They're actually really bad, I would allege, just that we haven't had a competing mechanism with which to pay. So credit cards are themselves, I think, a bit deficient for the online space. The transaction fees are extremely high with credit cards, and you don't realize this as consumers, but for those of you who run businesses, you probably do realize it. Certainly 2% doesn't sound like much to a lot of people, but when you look at like Walmart, you look at Amazon, these are people that are making 1 and 2% in profit margins per year. You are talking about doubling their revenue if you just take the credit card processing fees off the top, and Bitcoin has that potential. Micropayments also are completely not feasible right now. And micropayments don't seem like something you need, but because you've never been able to use them, you say that. So ChangeTip is at this point the quintessential microtransaction provider. Those of you who haven't used it will probably use it soon. I want to tip writers, or I want to tip content producers, maybe YouTube videos online. And I don't want to give like 5 cents or 10 cents or beer or something like that, but because I have to go through all the encumbrances of credit cards, and because there's a minimum transaction fee and there's all these extra encumbrances, I can't easily give it to somebody online. I can give 50 cents to somebody online. With Bitcoin, you can do that, and ChangeTip is doing it really well. For anybody who hasn't used ChangeTip yet, keep it on your radar. Go use it at some point. It's wonderful. Another reason we need micropayments that I don't think we realize is just the amount of spam and crap we deal with. Right now, you go to, let's say, a celebrity gossip site, and you go to the site, you want to read the 10 things that are sexiest about some actor or something like that. Right now, you have to watch a video for 5 seconds. You have to click the next button. You have to see a whole litany of ads just to provide the content producer the profit that they need to maintain their content stream. Well, optionally, in a model where we had something like Bitcoin for microtransactions, you could instead opt to pay that person 5 cents or 2 cents or even half a cent. That's more money that they would be making with their stupid encumbrances and advertising fees, they'd be happy with that, and you'd be happy not being encumbered. So there's a huge model for microtransactions online that we just haven't been able to pursue, that we'll be able to pursue with Bitcoin as it becomes more and more mainstream. The current systems require too much trust. That comes in the form, certainly, of people such as immigrants or people who have bad credit, who want to participate in things online and can't because their credit isn't good. Just because their credit isn't good doesn't mean that they don't deserve to be able to engage in transactions for which they have the revenue. But also, we need to have like billing addresses, and we need to have all these personal information. We have to know people. There are chargeback risks. There's all these sort of trust potentials that are required between the merchant and the customer that are really impractical, I believe, and most of us believe in the Bitcoin space with credit cards. Underserved banking clients, again, a very typical client base. You look at Amscot and the people that need it because they can't have banking services for all kinds of reasons. Plenty of good solutions for them in the Bitcoin space. And then, of course, globalization. For people here who have run e-commerce websites, they know what a pain in the neck it is to accept transactions from people internationally, and they know what a pain in the neck it is to service, Cambodia or these places. They just won't do it. But when you have Bitcoin, it removes all of the counterparty risk from the transaction. Merchants can be compensated, and we can start to open up to these spaces. We will never be able to do that with credit cards because it's too laden by all the encumbrances of the existing system. And so, kind of to highlight this point, I really wanted to show everybody what I deal with today, and what you probably deal with today. I'm single, I do online dating, and I need to pay for that. So it's an online service for which I don't really need to provide my billing address, and I frankly think it's kind of creepy that they should even have my billing address. But here on the left is a PayPal transaction for OkCupid. And in OkCupid, you fill out the 13 pieces of information just so that I can give them a small amount of money to proceed with the bill that is due. OkCupid similarly offers a Bitcoin transaction, a Bitcoin checkout mechanism. And when you compare the two, on the right you'll see that OkCupid requires no personal information whatsoever. They present nothing but a QR code, which I take a picture of with my phone, with my Bitcoin app, and as soon as I hit the send button, that blue waiting button there in the lower right proceeds to the next dialogue. I don't even click a button, I don't fill in a form. I just pay for that purchase on my phone. And encoded in that QR code, by the way, is the US dollar amount. And the entire thing is handled between my payment processor and OkCupid and in advance of the form. And for people that do online commerce, or for people who know that the friction that you provide your consumers is inversely related to the likelihood that they'll make their actual purchase. So right now there's lots of money, I think, being lost by various online merchants in the form of encumbrances due to the trust requirements of the existing credit card system. So these are some really easy ways online that I think that Bitcoin really shines and really offers a strong competitive advantage in a way that I don't think anything will in the commercial space. It's an open protocol. If you look at some of the analogies in the 90s, we had things like competing with HTTP. We had things like CompuServe and Prodigy and AOL and Genie and a handful of other things. These were all commercial proprietary software stacks that were laden in one way or another with an encumbrance that the open standard could sidestep and could provide much better because there wasn't a central controlling interest. And that's what I think we see here in Bitcoin. But I'm getting ahead of myself here. Let's talk about some of the easy misconceptions in this 1.0 space. And yeah, I certainly find this quote very inspiring, particularly since it's Western Union, which is kind of facing a major change in their business model. Their point was that the telephone had too many shortcomings to be seriously considered as a means of communication, and obviously we know how that worked. In fact, I've been to concerts that are basically like this, where everybody has a phone in the crowd, and it's very obvious that telephones were kind of important. Well, I think the same thing about Bitcoin. So the elephant in the room, the thing that I really deal with a lot is, well, it's so volatile. How do you expect people to take it seriously? And that's a very, very good point, but it doesn't matter. It doesn't matter even in the slightest. The way I see Bitcoin in this 1.0 space, the way a lot of us see it, people won't know they're using Bitcoin. People don't want Bitcoin. What will probably or certainly happen is merchants will have a BitPay terminal or a Coinbase terminal. They will send to that terminal the US dollars that they require. That terminal will do the Bitcoin conversion on the fly. It will guarantee, it will provide insurance, to the merchant that he will receive the US dollars in his account, and it will present a Bitcoin amount at that point of sale terminal. Meanwhile, the same interface will be available to consumers. You'll open up your Citibank app, you'll open up your Wells Fargo app, or you'll open up your, your Starwood's credit account app. And on that, you'll have the ability to pay by QR code or pay by NFC. For the user, he'll also be displayed the US dollar amount. Behind the scenes and behind the curtains, the volatility of the Bitcoin network will be picked up by the insurance providers. The user will be paying in Bitcoin, the merchant will be receiving Bitcoin, and the Bitcoin protocol will merely serve as an intermediary for which there's no exposure to volatility on either side. People won't even know they're using Bitcoin. It's just a payment mechanism. And in that case, there's no risk whatsoever for the volatility. The consumer paid in dollars, the merchant received in dollars. There are plenty of insurance providers right now that are willing to absorb that risk. They charge a very small fee for it. BitPay is currently $30 a month. Maybe that fee will rise slightly, but it'll be somewhere along the lines of a very small fraction of a percent of the transaction fees, which is significantly cheaper than what you'll see with credit cards. So I think that for anybody who believes that the Bitcoin volatility is an issue, they're incorrect. If you're investing in Bitcoin, which is not really what I recommend, it's not a bad investment per se, which is not part of what I am, I'm a programmer, then yeah, volatility matters. But don't invest in it from like a asset perspective. Use it as a technology. And then this is what we advocate, this is what we see a lot right now in the Bitcoin space. So you'll see more and more products that are leveraging Bitcoin behind the scenes in terms of its payment mechanism capabilities. Certainly we talked about some of the other misconceptions, security, the darknet market type faults or failures of the currency. These are things that are certainly true to some degree, but I think they're becoming less significant, more marginalized considerations. And certainly I'll have Q&As here after the talk. You guys can ask me your questions. Maybe there's some misconceptions we should address, but that's about it for the 1.0 stuff. You look at the businesses that are opening here in the 1.0 space, and there's a lot of them, and we're seeing them start to gain traction. They're raising lots of money. I think we're at, what, 300 million in VC money right now spent on Bitcoin startups this year. They're typically one of these types of businesses. Remittance, that's Western Union and MoneyGram. Those guys are going to be put out of business in very little time. Bitcoin will do what they do very well. And there are a lot of companies that are moving into that space. And Ned had a whole conversation on that. But Bitcoin works very well for transmitting money across borders, and we know that. Innovation without permission is a very core theme in the Bitcoin space. Because of all the trust required in legacy systems, it was really hard to do much innovation in that space. And we needed permission from banks and from insurance companies and from the government and on and on and on. A lot of the Bitcoin businesses are using Bitcoin as a mechanism where they can sidestep some of the regulatory encumbrances in that sense.
Excuse me, can you give me a pre-101? Is a Bitcoin digital object that stores in your computer, or what?
So I have actually a couple pretty extensive talks on what a Bitcoin is, but for all intents and purposes, it's a unique number. It is itself, when the Bitcoin is mined, I think in the simplest term, a miner produces a Bitcoin, and that Bitcoin is a version Bitcoin. It has been allocated out of nowhere. It is a Genesis Bitcoin. The miner can then write a check off of that amount, either in full or in part. I can write, again, it has Satoshi, so I can write a check referencing that Bitcoin to some fractional degree, either 0 to 100%. So maybe I write it for 10 Satoshis. I write a check to another person with that amount. That person himself now recognizes that this person who had that block now has some fraction less that was in his account, essentially. This person can write a check off of that check. This guy can write a check off of that check, and so on. And so Bitcoins are typically mined, exist once, and from them checks are written. And from those checks are written, and on and on and on. So it's a triple ledger accounting system. You could say that it's a number, you could say that it is a unique number in the system, but more accurately, it is a balance that is created more or less by miners, and then from there, from which checks are drawn until that balance has been depleted, and it is now 0, and it exists still on the network in the form of checks that have been unspent thereafter.
Are they able to re-aggregate it back together, or no?
There are options in the program to compress the data set, and yes, it does that in some capacity. There's also coin joining, which does that as well. But typically, for most definitions, what we would suggest is that it's a triple entry accounting system. Okay. And that would be, I think, what the Bitcoin would be. So any questions anybody else has? Any other places anyone's stuck right off the bat I can answer? There'll be Q&A afterwards, but I don't mind doing them now, yeah.
How do you handle currency conversion?
Currency conversion, it is an open market, so there are exchanges. In the same way that we have exchanges for any other foreign exchange currency. The fiat currencies are a lot more controlled in the sense that you have all kinds of, maybe it's manipulation, maybe there are better words, I don't really know, but whereby the currencies themselves are pegged by a central authority. In the case of Bitcoin, we don't have that. So people stockpile them in exchanges. Bitfinex is one, I believe, Bitstamp is another, there's a bunch of these. And there are constant orders going on throughout the day. I'm not sure what the daily volume is at this point. But what happens is when you make a purchase through a provider, let's say your phone needs Bitcoin that second, there'll be some amount of float at Coinbase, say. Coinbase has algorithms to buy from the markets at a certain rate when they need it. They then turn around and sell them when they're also above that float amount. All of that is worked on behind the scenes by these companies. And there's a handful of exchanges that process these orders in real time. The volatility is high enough to where it's not a problem. It's not a very deep market by most financial foreign exchange standards, but it's deep enough to where it's a non-issue, certainly for consumers as well as to these insurance providers of the volatility. So it's pretty traditional actually in that sense. It's very, it's also like gold than it is like any other foreign exchange reserve. Any other questions so far? Cool. Yeah, so hodling your Bitcoin, of course, was something that a lot of people did a great success. Hodling was spelled intentionally. It's a bit of a, it means hold in the Bitcoin community. You'll see that sometime. If you guys haven't met the 17-year-old that has like Da Vinci shoes and like, I don't know, more clothes than taste, I've met these guys. There's a lot of those guys who made that money. That only happened once. It won't happen again. At least I don't think. But there are a lot of people who made the money at that the first round. They're very entertaining people. Better payment mechanisms, we're seeing that already. Apple Pay is a commercial competitor to Bitcoin as we see it, in very much the same way that AOL was a commercial competitor to HTTP. I think there's room in the space for some commercial competitors. I see a lot of people trying to get into that space. We'll see how it transpires, but I believe it'll do a repeat of what we saw in the 90s, with proprietary versus open source standards. Better credit mechanisms we'll probably see as well. Certainly there's a lot of peer-to-peer credit sites and things like that that need so much trust right now to work that it's an encumbrance to their ability to even provide some of these sort of more exotic credit mechanisms. We see some stuff there. I don't know if it'll be a major source of business or not. Centralized gambling was very successful for people. If you were a poker player and you want to do Poker Stars, it was kind of a pain in the neck when you were no longer able to pay by credit card. Well, now there's things like clubs with seals or Satoshi Dice. These guys are making good money by running businesses that are outside the United States in the gambling context. Efficiencies in payment processing, as we said, BitPay is a great company. I think they're going to be an outstanding company, right up there with Amex and Visa. There's others. Coinbase is very similar in that respect. And then underserved banking markets, which are things that are certainly unsavory at times, but also things like pharmaceuticals, which like my grandparents buy from Canada. But right now it's kind of a pain in the neck. I don't love that they do it, but they're cash strapped and they seem determined to do it. So for them it's very hard because they have to do all kinds of different stuff and use credit cards. But what you'll see is Bitcoin start to displace it for all the reasons that the trust and the regulatory requirements require. But here's where the 2.0 genius lies, and here's what you're starting to see on the finance networks as well. This notion that the blockchain is revolutionary. This is something that I certainly believe. This is something that I think will be a mantra that you guys will all be hearing at some time with some very little time with regularity, and it is true. But the blockchain is probably the most important computer science discovery of our times, certainly of my time. It was a thought to be unsolved problem in computer science. In fact, it was proven unsolvable in computer science until a man named Satoshi Nakamoto solved it in 2009. And it was this solution that really enabled all of the Bitcoin innovation. So if you've wondered, like, why all of a sudden is this Bitcoin thing a thing? Like, where did that come from? Well, it was because this blockchain was invented, and it's because we had this option now. It is, at its simplest, a protocol for allocating scarce resources. You compare most internet protocols today and their systems for allocating unscarce resources, things like YouTube videos, which can be disseminated to everybody, things like podcasts, which are disseminated to everybody, things like content, Twitter, on and on and on. We never had a really good system for distributing scarce resources, but that's what a blockchain does. And it just so happens that this currency is the lowest hanging fruit of what you can do when you now have a system for managing scarce resources, at least in a decentralized capacity. Centralized allocation of scarce resources is very common. We see that. Blockchains allow decentralized allocation of scarce resources. Again, it has no center. Everyone participates. It may be that in a transaction, I want to sell you a beer for $5. You want to say you spent $1 on that beer, and I want to say you spent $500 on that beer. Well, through a lot of the checks and balances that are built into the Bitcoin network, one truth will remain, despite however much arguing or arguing that we do in the network. And that does it without a center, without a counterparty, or at least with the counterparty being the network. And again, this is a revolutionary concept. This will be used in all kinds of things that we currently define as having a center. And that's kind of the gist of what the blockchain is at grade level. We'll probably see blockchains used from everything from, like right now we use Comcast for our internet access. So we use Comcast because it's centralized, and they manage bandwidth on the incoming side, and then they manage your stream on the outcoming side. We'll see that form more of a decentralized capacity, where we have antennas on our roof that relay to our neighbors, that relay to regional centers, and all of the accounting will be done by the network without a center. These will be the types of applications that we'll see, and it'll take a while, but it's in this sort of vein that we're starting to get into now, where I think we are in the Bitcoin 2.0 space, in this notion that Bitcoin as a commodity is a thing, and that Bitcoin in fact has a large amount of intrinsic value. You saw on TV a lot of the pundits would laugh at Bitcoin. They would say it's worthless, it has nothing, it means nothing, and on and on and on. Well, for a lot of the computer scientists that were in this space, we were like, no, there's actually a lot of stored energy there. There's a lot of really cool stuff you can do. And so we're at a point now where computer science is starting to catch up and starting to build this stuff out of the intrinsic value, out of the commodity value that is Bitcoin. You kind of see that this is Max Loach, and he's actually popular in the Bitcoin community. There were a lot of pundits in the 1.0 space, again, that were saying these disparaging remarks about Bitcoin. And now they're starting to say how great blockchains are. And it's kind of like analogous to saying, basically, that automobiles are really cool, but gasoline is worthless. No, they're part and parcel, they're the same thing. And with this idea, we can do all kinds of cool stuff. So finance applications are at the top of this list. Personally, I'm a big believer in counterparty. I have a small mention of that slide here in a bit. But any context that we needed a counterparty agent, either an attorney or perhaps a clearinghouse, these are really easy applications of Bitcoin as a commodity. And so I think you'll see a lot of stuff developing in that space right now. Various forms of registries and notarization whereby we needed some authority to attest to a truth. Again, we'll see the 2.0 space really start to leverage the Bitcoin commodity value for these things. Storage is something that's being worked on by some people right now, which is a really cool idea, and it's a very complicated thing. It uses Bitcoin incidentally. There'll be more built into these storage spaces. But right now, when you download something on the internet, like, you know where it comes from. It comes from YouTube, or it comes from Amazon's web services, or one of these types of things. We can design systems now that content comes from random people, or bits and pieces come from random people on the network by way of a blockchain. And there's a lot of people in that space trying to do that. They're trying to do that for a lot of reasons. Certainly, it can be more efficient in terms of a network design standpoint. There will be fewer middlemen that could be collecting economic rent for the purpose of serving content, but also can be useful for fighting censorship. So that's another nice promise of this technology as well. Certainly, speculation on these assets is taking off. You see people hoarding various 2.0 coins and vouchers in the system. Identity management is expected to be a big thing. Currently, we rely on the government and or on Facebook to manage our identities, who we are and what we do and who we know and what our age is and our credit and so on and so forth. People want to see that decentralized for a lot of reasons. It'll really open up borders. It'll enable a lot more transactions financially. It'll create more trust models. So identity management is a big topic right now. It's very premature, but it would be conceivable that at some point we would have systems very much like Facebook has with who we are and who our friends are and how long we've been around and on and on and on. Maybe it'll replace the traditional fiat services, maybe it won't, maybe it'll work in companion with it, we don't really know, but these options are at least on the table. Sidechains are another big feature of Bitcoin right now in this 2.0 space, and sidechains could definitely get a whole another talk, but the gist of it is this. If Bitcoin is gold, and we need perhaps extending currencies or extending fiat that would perhaps themselves benefit from being backed in Bitcoin or backed in this gold, sidechains enable that. So what we can do is start creating separate models, separate currencies, separate tokens of value that are backed themselves in Bitcoin via this sidechains feature. So there's a lot of work being done on that. And again, I can't get too inundated with that because it is a big, long conversation. But you're starting to see Bitcoin fulfill its promise as a digital gold in this capacity as well.
So, sorry.
Yes?
So are you saying that the sidechains or the Bitcoin is going to back a physical currency?
It would be in your prerogative. There's a cryptographic pegging mechanism that is at work there. So what you can do is you can suggest to people, okay, if you, for example, US dollar would be an example prior to 1970 or so. If somebody wanted to, they could peg the dollar in some amount of Bitcoin. And I'm using the term loosely. And so that would be a physical token or a physical dollar that you would be able to redeem cryptographically for Bitcoin back at the source at the network. And you could create faith in your alternative currency with this model. So yeah, it's a very open-ended API protocol type thing, and we don't really know how this stuff is going to be used yet. You know, people design the tools, but people don't really know what's going to be made out of them. There's a lot of people thinking and ruminating, and the hard work has really yet to be done in that sense. But yeah, that's exactly the kind of stuff we can do. Here's a bunch of vendor logos for you, and these are companies to watch. I am very affiliated with Counterparty in the upper right. In fact, I'm the recently appointed community director of the Counterparty Foundation, and I speak a lot about Counterparty. I have many talks about Counterparty, and that is a 2.0 project. It competes at some level with Mastercoin and with Color Coins. There are alternative protocols in this space as well that do similar functions. There are functions for managing user-defined assets, for leveraging smart contracts, and for really kind of competing with the New York Stock Exchange or the Chicago Mercantile Exchange. Again, by burning Bitcoin. Adjacent to them is the storage project and MadeSafe. Those are also two very similar projects that solve very similar problems. And those problems deal with how to have cloud-based storage mechanisms that have no center. So we talked about the scenarios where maybe YouTube is the center of our data repositories. Well, MakeSafe and storage are systems by which users would supply that data and be compensated in some form of value, Bitcoin or what have you, for serving content and the whole thing being decentralized. And we talk about the 2.0 businesses and what's going to start happening now in this space, because I think that this is really where there's a lot of growth for everybody in this space to really quickly, even with low-hanging fruit, start to make progress. Assets are a big deal. User-defined assets are a big deal. You know, we talk about the Bitcoin, some of the volatility issues that are out there. What we have in Counterparty and these various functions, the ability to define things like gold, if maybe that's what you want, or maybe even you would want to define ad credits, or maybe magazine credits, or t-shirts, or any of these things. We want to track these user-defined assets in a way that's secure and has no center. There will be a lot of businesses that do that. Digital Tangible Trust is one company that's doing that. They sell commodities, gold, metals, and things through the Bitcoin network. You get a token that is representative and that can be redeemed for gold at some level. I think we'll see some more exotic assets in the future, things like a CPI asset that will have a very stable store of value, that it will be itself comprised of various forms of metric for the CPI perhaps, or something. Ben is a company that's doing something in this space where they're trying to create a inflation-proof currency that is made out of energy futures and various commodities and stuff. We'll have the ability to store value in Bitcoin on the Bitcoin network using assets. And I personally believe the Counterparty will let us do that. But that's the 2.0 business that a lot of people are starting to invest in right now. Name speculation. Right now, we do things in a very centralized way online, like .coms and .nets that go through the internet and through the various name registries. We'll start to see that move onto the blockchain. Right now, it is again centralized through ICANN, and we'll start to see that decentralized. And it won't happen overnight, particularly on the .com sense, but we'll start to see it with various functions on various networks, I think, over time. So I think that actually name speculation could be a very profitable thing for people who want to invest in these 2.0 spaces. You can do that with Mastercoin and Counterparty by porting asset names if you wanted to, and I suspect that those will be worth money. Contracts are enormous. I can't emphasize that enough. I actually have another talk that I think I'm going to do today, depending on whether or not I have the time in the audience, but smart contracts are a huge deal in and of itself. Right now, when we want to execute a contract, we involve an attorney, and we go to our courthouse, and we deliberate, and we get a jury involved, and we do all these things that take up a lot of time and money. With Bitcoin and with services built on Bitcoin, we can instead do those types of things on the blockchain, and rather than use the courts, we can assign an arbiter, perhaps, who is himself maybe just a person. Maybe he specializes in a very specific type of arbitration. Maybe there's a process. I'm a landlord, for example. Maybe I want to have tenants, or maybe my tenants want me to have their deposit held in escrow. We could hold it in escrow in the Bitcoin network in a stable store of value, such as a USD asset. And at the time that they leave, I may want to execute the contract by which they are rewarded some part of their deposit. It would go to an arbiter. An arbiter perhaps would then say, okay, the landlord gave me these pictures and these various parts of information, and the tenant is going to lose $200 out of their deposit, and the arbiter strikes the gavel, and that amount is awarded. It is enforced by the network. There are no courts involved. We may very well see this type of service offered by companies such as LegalZoom. I don't know how that will work out. It may be still small attorneys, but the point is that we can start performing contractual services using Bitcoin as a commodity in the 2.0 space. And I think there's a lot of efficiency there. I would tell people not to underestimate that movement at all. I think it's a humongous field that's getting started. Really started to base my career on it, quite frankly. Various forms of arbitrage, I think, will be very accessible in the 2.0 space. People who have varying assets, be it digital assets or straightforward assets that are performing these types of services, providing maybe ad impressions at a very quick rate, or buying up ads and selling to providers of ads, or just traditional arbitrage of currencies, or whatever the hell. I think that'll be a very common thing in the 2.0 space that people can look into. Decentralized gambling is kind of new as well, and this kind of ties into the smart contracts. Currently, if you want to gamble, it's illegal maybe, or it's very difficult. And with the existing system, you have to deal with a server that's outside of the United States, and yes, you can use Bitcoin, but what we're doing with smart contracts is we can do things like say, I'm putting in $10 on the spread on a Dolphins game, who wants to take that spread? The network will match me up with another person. At the time that the game is over, we'll parse the front page of ESPN, and that amount will be awarded based on what is parsed. These are the types of contracts, decentralized contracts, that we can start writing and executing. And there will be services about this that specialize in all of these types of things and all these types of betting services. And it'll be significantly more efficient, if not 100% efficient. Certainly in the case of gambling, you consider that the house takes a small percentage right now. In this decentralized model, there's very little overhead, something to the tune of less than a couple pennies, whatever gas you're burning in order for the network to execute it. So we'll see a lot of efficiency in that space as well. Regulatory solutions, and I use that word regulatory solutions in sort of loose sense. I'm not saying that we should sidestep regulation entirely, but there's a lot of regulatory requirements that are very onerous and make it hard for people to run business, particularly internationally. So I think that things like smart contracts and assets and such will make that a much easier proposition through the Bitcoin network in the future. Any place there's counterparty risk right now really needs to look at how that can be displaced by Bitcoin. We have counterparty risk in so many different ways. Counterparties are involved in any amount of funds moving between accounts or assets moving between accounts, etc. And we always take a risk when we go through a center, either an attorney that maybe we don't particularly trust, or maybe it's a business that we don't particularly trust, or maybe it's just a system that we don't trust. We can start using contracts and algorithms in a way to offset a lot of those problems currently, and hopefully at a greater degree of efficiency. And again, internationalization. Right now, if you're doing a contract in, I don't know, India or something like that, you may not trust their local system. So you want to set up your contracts in a way that I think are accessible by all parties involved. You may want to declare on the blockchain your contract rather than resorting to local law. You keep funds in escrow and you deal with the risks that way in this space. I think that we'll see a lot of opportunity there in the 2.0 space, dealing with these international business scenarios. So, Paul Krugman is somebody I really like. He's a Nobel-winning economist. I think he's actually a very bright guy, but he's always been very apprehensive about technology. He's always been the quintessential Bitcoin doubter for me. He's always been the quintessential technology doubter in general. He's famously predicted that the internet would be no more greater a source of efficiency on the economy than we see in perhaps fax machines. Obviously, he was completely wrong about that, and he knows that now. He's made similarly disparaging comments about Bitcoin. He's suggested that it is nothing valuable, and then suggested that it's a fun kind of idea, but it's still not valuable. And now he's starting to say, well, blockchains might be very important. And he's very close to probably saying at this point that Bitcoin is itself important, once he realizes that blockchains are indeed made out of Bitcoin. So I think that anybody who suggests that Bitcoin isn't here to stay, that's fine. Just start watching the blockchain talk, because the blockchain talk precedes the Bitcoin talk, and you're going to start seeing a lot of that now. This isn't a fad. This isn't something that is a minor trend. This is a major source of economic innovation. This is a major source of our future's efficiency gains. This is a big movement. So I think for anybody here who's thinking, like, what is this and how can I use it? Hopefully I've addressed some of the questions. Hopefully I've given you an idea of where this is going to come into place. And hopefully I got you guys a little excited about what I'm very excited about these days, which of course is Bitcoin. So come out to a meeting if you guys want more questions answered, or certainly if you have any questions now, we can do that too. But that's my talk. I hope you liked that.